Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 30th of May. All right, now once again, the tit-for-tat sort of commentary goes on with the US debt ceiling, a sign of a rocky road ahead, okay? So this is the day-on, day-off sort of scenario you're going to get out of the media and out of the politicians, right? So I expect this to continue right up until the deadline. In fact, I've been calling it for some time. I reckon it'll go a week or 2 weeks past the deadline before they work out a deal. But as it gets closer, and the first week of the month, non-farm payrolls on Friday, we are starting to get some massive build-up of pressure on the technicals, right? This is where you got to really focus. Okay, just looking at the on the currency side of things, the dollar index. Okay, it's been cruising topside, as has dollar yen, dollar Swiss, and dollar CAD. Now we're starting to see a massive build-up in pressure on a number of these instruments. Euro downside as well, sterling, Aussie and Kiwi. Now, what am I talking about? Well, for a good trend line, right, you need 3 touches to confirm it. Now, if I'm looking at Euro, okay, from where this trend line starts, you got 1, 2, 3, 4, 5, 6, 7 touches here on this trend line, right? Now, this makes this trend line a huge tradable event. Ideally, what we would want is a big US number, a big beefy number, or a big European number, German or EU, to really give us direction there. And that's where we can really fire, because there's going to be a lot of interest, momentum shift. If this thing goes up, say we get some really terrible US news or really good Euro news, this thing's going to blast through this level. This first one in particular, it'll get another shot in the arm when it goes through 107.80, and we could end up back at 109 very quickly. Okay. All the positive news on the US dollar has been cooked in, right? So we sort of know where to hit the market, but we don't necessarily know what to do at this point, because what are the implications if the US does default, right? Or they don't pay it on the date. I can tell you when I've seen it before, nothing happens, right? And it takes 2 weeks later and they get a deal and then it all goes away. Now, the media has been focusing on potentially some chance of, the Fed raising rates. You think with the debt scenario in the US, that would be impossible, but stranger things have happened. But I tell you what, I look for other signals to tell me, are the Fed raising rates or looking to do so? NASDAQ's through the roof. All the equity markets are bouncing here. That tells me that there's no real pressure on interest rates in the US. Otherwise, the equity markets will be getting hammered, right? The commodities, well, oil is stalled here, around $73 a barrel. And on the dailies, I've got gold up here. It's really looks like it's had enough and really sort of stalling here around 1937. You got to expect to clean out there. The cryptos, well, back to that resistance line, and the technicals working very well. Now, the good thing is, on that last point there about the cryptos, the instruments are trading technically very well. Even with this debt ceiling issue in play, we are seeing good trending markets, short-term trending markets. Now, we have great trend lines in play. Besides Euro is a standout, right? For me, the dollar index also, dollar yen, it can be a little bit trickier, but it's got a great technical setup. And then sterling's not far off as well. And then you've got the Aussie, which is massively oversold, I think, at this point. And same with Kiwi, but Kiwi doesn't have a great technical setup, where the Aussie has a resistance trend line here to work with. So we've got things in play. We just don't have the answer just at the moment, right? And that's the hard part. It's about being disciplined, because you can see build-ups, right? It was Memorial Day in the US. Now this is the real start of the week. So what are we expecting? Well, not much on the currencies, I can tell you, because as I said, there's a build-up of pressure on the technicals, but we don't have the clear direction fundamentally yet where the dollar's going to go, or all the other instruments, okay? There's pressure on a lot of these commodities. Keep an eye on that as we go forward. And if I just get up the bit of a calendar to look at, now there's not a huge amount of data coming out, okay? You've got the Aussie building permits, like it's a tiny number. Euro zone economic sentiment, that's worth having a look at. S&P Case-Shiller home price numbers, like a really strong traditional number, which has implications. Probably more importantly, US consumer confidence. And then you got the Dallas Fed Manufacturing Index. And that pretty much does it for today. So there's not a huge amount to come out. And unfortunately, the news we're looking at is the sort of the toxic sort of diatribe we're getting from the US with regards to the debt ceiling, right? As I said, that's going to be a day. Every other day will be positive. The next day will be negative, positive, negative, until we get to the deadline. You think it's all going to crash like the Y2K bug, but it won't, right? And we'll probably see the deal done after the date. And whilst that lingers, it really screws up the market because no one really knows whether to buy or sell, right? And what we're talking about, buy and sell aggressively. We hope there's a deal done, and I don't think there will be before the non-farm payrolls, because that's our first big hairy number out of the US to start the month. Okay, the inflation numbers come the week after usually. So we want a deal done here. Is it going to be done? I don't know, right? And I don't really know. So basically, if these US numbers come out and they haven't worked out a deal for the US debt ceiling, well, that's going to really diffuse the non-farm payrolls. Okay, strong numbers may go towards, maybe the Fed does this, does that, but it's all hearsay. Like, there's no real serious implications. If anything, coming into Thursday, the inflation employment numbers out of the EU zone is probably our best opportunity leading up to it, because you know what? We've got a great technical setup here on Euro. It is trending down, but we start to see some strong numbers there. Well, it gives us implications that the ECB may have to raise rates, and that's something we can work with. Up until then, right, just hang tight. If anything, this game 7 of the NBA is on tonight, the Celtics versus the Heat. I'd be watching that if you're not exactly sure what's going on the instruments. All right, guys, that's it from me. Have a good trade day. All the best. Cheerio.